Thanks for joining us today on Market Call. I'm Morella Fernandez. Bruce Murray with us on the show, CEO and CIO at Murray Wealth Group. He'll take your questions today on North American and global equities. Here's how to reach us. 1-855-326-6266. You can send an email, marketcall at bnnbloomberg.ca. Bruce, good to see you. Thanks for coming in.
You're welcome. Thank you.
Let's talk about the conflict in Iran. We can't not talk about that.
No.
When do you think it's going to start becoming more impactful for the average person in North America?
Well, North America, we're insulated because we produce more oil and gas than we need. So it's going to be an inconvenience because the people selling this stuff are going to jack the price up because they can because of the global price. So I don't think it's going to be this type of inconvenience that's going to cost us some money rather than,
But you don't think as we go on, it could become more of a problem? Obviously, I know there are discussions about releasing some of the reserves, which will take the pressure off.
Yeah, well, it'll take pressure off pricing, but they're talking 400 million barrels to release at 20 million barrels a day. That's, 3 weeks, 4 weeks? So it's intermediate. I mean, I think we need to see the conflict resolved in some form that we can at least reopen the Strait of Hormuz. Whether that means, Americans have to land on the north shore of the strait and go into Iran and eliminate it. But somebody this morning I heard, was very familiar with the situation, said there's thousands of fishing boats on that shore. And are you going to kill fishermen?
Yeah.
And the Iranian Navy has boats look just like fishing boats that have mine launchers in them,
and mistakes have been made before.
Okay.
Let's talk about underlying issues of trade disruption and tariffs, which are still simmering away for business owners. Are they still an issue for them?
Well, I think it's the uncertainty. I mean, we are coming up to the renegotiation of the free trade agreements this summer. Trump's threats still, maybe they're meaningless, maybe they're not, but it's still going to be there. And I think, we're seeing most American businesses say, let's get back to business and keep the free trade. Even in the United States, people want to expand their business, except for maybe artificial intelligence or something that's not really tied up in the tariff wars. You're going to freeze until you get a clear what appears to be a 5 to 10 year runway to do something. So, if tariffs are on, maybe you'd build an aluminum smelter. If they're off, you wouldn't go near an aluminum smelter. So it's that sort of stuff, and that's an extreme example. But
let's talk about opportunities you see in the current climate. What sectors would they be in?
Well, we still think the AI trade, and we'll talk about this more later, is it's like buying General Motors in 1922. Like, this is going to be a long runway. We don't know whether General Motors or Ford's going to win, or Chrysler, but the artificial intelligence is going to be the dominant play. It's going to change the way we all do business, especially in the white-collar jobs. And we'll see what happens. And, there'll be new jobs emerge from it. I mean, when I was a kid, I remember they let go all the operators from the telephone companies. And, we're not going to have jobs for these people. But, then hair salons and nail shops open on every corner, and, other things happen.
So we don't know what that emerging industry looks like.
Yes, exactly. Okay. So there's uncertainty.
Let's take a quick break. We'll line up the first phone calls and emails today for Bruce Murray. He is of Murray Wealth Group. He's going to take your questions on North American and also global equities. Back in a moment. Welcome back. We're going to start with an email today from Corey. He says, what's your outlook on Apple right now? Is it still a buy at these levels? We're going to turn that question over to Bruce Murray. He joins us today as our guest. Where are you more widely on the Mag 7 these days? Do you think some of these are depressed and worth picking up?
Yeah, I think I like the Mag 7 generally. With Apple, I'd call it a hold here at the moment. Apple has yet to enter the AI space and probably will do so just by
partnerships.
They've got the customer base, right? So if they'll probably be able to get a pretty good price for when as they introduce AI into their phones. And so I think that's the upside. And the stock's recovered well. It was sort of punished as Apple hit market share. Their market share stopped growing, but then recently the Chinese sales were quite strong, and that's given the stock a bit of a boost. I guess China's market is huge, and affluence, I should say, is rising, and so you're probably okay buying it. It's a stock we don't own, and therefore I have to call it a hold.
Okay, and that obviously wouldn't be affected by tariffs because much of it is built in China, so they're selling it locally, no upswing there. Okay,
correct.
Let's go to the phone lines, and Jim is on the line. He's in Elliott Lake today. Hi, Jim.
Good afternoon to you both. Bruce, I was going to ask you about Bank of Nova Scotia, but when you look at all the 5 big banks here in Canada, over the last year, they've all just kind of gone through the roof here. So maybe your thoughts there, and if I put you on the spot, which one of the 5 would you be buying today?
Okay.
Thanks for the question. Go ahead.
I guess we can answer that. Scotiabank's the only one we still own. We own a bit of TD left over. But yeah, the banks did very well. I started my career 50 years ago now in this business as a bank analyst. And when banks get to 12 multiples, that means you're getting an 8% ROE, just simply 12.5 divided by 100. Okay. And so the ROE that you can get on this gets low for a business that has risk. Like as the economy enters, we saw Go Easy have financial problems,
yes.
And if that spreads up the affluence chain a little bit, the banks are going to start having losses. The housing market in Ontario is pretty sloppy, and
do you anticipate it moving up that chain?
I can't answer that directly, but there's danger of it. I think the government is taking action, and I actually believe the economy is strong enough. I mean, we're being bailed out by gold and oil prices, right? They're the 2 largest industries in Canada, so when your 2 largest industries are booming, we should do okay. But it's better to own a house in Wawa than Toronto as a result of that. So that's what we're saying. So
would you hold your banks then and not necessarily put your money in?
Well, we've actually sold off most of our banks and gone into other stocks where we see more upside. We sold Scotia because it's in our income fund and it sells a 4+ yield. The other banks some of them are in the 2s, some of them in the low 3s. And we have a sort of 3.5% minimum that we want in our income funds. The best bank is always Royal Bank. So if you want to buy the Class Act, you're going to do fine in the long term. You'll do fine in most of the banks in the long term. We're just out of them because we think there's better opportunity elsewhere, and we'll get back into them when we see relative price being better.
Got it. Okay, let's go to our next caller then. Paul's on the line. He's in Prince George, BC. Hi, Paul.
Hi, thanks for taking my call. Mr. Murray, thank you so much for Hammond Power. My question is on NVA. Recent announcement of a U.S. IPO. I'm just kind of concerned about the Canadian share price. I guess probably you really don't know until they come up with a price and a number of shares that they're going to be releasing into the U.S., how it will affect the Canadian share price. But anyways, your thoughts. Thank you.
Yeah, how does that work? What would you expect, for instance, from a rollout in the U.S. for Canadian shares?
I mean, MDA in the U.S. is regarded as a U.S. company. They supply a lot of product to the U.S. Telecommunications, the satellite parts, and so it'll be a success in my mind. And the big underlying theme here is defense spending picking up 5% across the entire NATO area. Maybe we won't get there, but even if we go up 40%, go to 3.5% or 4%, it's going to be a lot of money's going into this, and space clearly is going to be one of the leading areas for that. And so MDA is well positioned on that. We do not own it. Unfortunately, we haven't had time to really get into it and do the number crunching to see whether we like the price of the stock or not. But the theme is the right theme.
If they have that U.S. IPO, do you expect any effect or fallout for the Canadian shares?
No, they'll be tied to the U.S. price. So I don't think if the Canadian dollar goes up, you'll probably suffer as it gets priced off of U.S. versus. Okay. But vice versa, if the U.S. dollar goes up, you'll get
Okay.
the gain.
All right, let's get to an email then. Chelly has a question saying, would you buy Costco at its current valuation? I know there are concerns about valuation for Costco, even though people like the business model. What do you think?
When I set up the company, I thought I would just buy the 35 best companies in the world. Costco was one of them. We did sell it when the PE got to crazy heights. It's still a great business. It's very expensive. I think you can buy the Mag 7 are going to grow faster than Costco. They may not be around 100 years from now. Costco possibly will be, but I think so. That's my feelings. It's too rich.
Got it. All right, let's take a quick break. We will be back with Bruce Murray of Murray Wealth Group, taking your questions on both North American and global equities. Here's the number to reach us and the email address. We're back in a moment. Welcome back. Let's go to an email from Oliver, who says, I have a position in Uber. It has not done well for me. I would like the guest's thoughts on Uber. Is there any upside left for the company? Bruce, this is a company, people love it for what it provides and how easily it provides. I know they've partnered on personal driving, self-driving. Right. So they should benefit from that as well. Stock's pretty down. What do you think about Uber?
Well, it sort of got hit on this whole AI theme. AI is going to
destroy
everybody's business. And so instead of going to Uber app, you just go to your AI and say, nearest car, come get me. I think that's a long way away if it happens. I believe we own Uber. I think it's an outstanding buy here. I believe that as the big self-driving vehicle companies get into, Uber's got the customer base.
So you would hold on? I'm imagining this person has seen this drop.
The drop is quite considerable, and it's a great buying opportunity in my mind.
So you'd pick up at this point.
Yeah.
Got it. Okay. Let's go to the phone lines. Roman is on the line. He's in Edmonton. Hi, Roman.
Hello. Morning, Bruce.
Morning.
I'm looking for this CPX. It's Capital Power. Is it a buyer today? And what you think about the next couple of months? Is it going up or going down?
Okay. Thank you for the question. Capital Power, we will pull up in just a second. What do you think?
So, I can't help them on whether it's going to go up in the next couple of months. We own the stock. We like the business. The yield is pretty good. One of the issues I'm hearing is, AI should be going to Alberta. Natural gas, land, everything that's
And they've got
needed.
some projects they're undertaking.
Yeah. However, I was at a presentation where Capital Power spoke in January. They said the government's still got to get its act together to really get this going. And I met an AI, one of the guys I curl with is an AI consultant, says they're all going to Texas because Texas has got gas, got land, and doesn't have any regulatory.
So was it a regulatory hurdle?
It's a regulatory fears, yeah.
Okay.
So it's just Canada in general, that we
too much red tape.
Yeah, too much red tape, too much of the green image still for this to go happen.
Interesting. Okay.
But Capital Power is still expanding in the U.S. There is projects happening in Alberta. Power demand across North America is going to skyrocket as we do AI, no matter where it is. So we like the stock longer term.
Okay. Let's go back to the phone lines. And Frank is on the line. He's in Waterloo, Ontario. Hi, Frank.
Hello there. Good afternoon. My question's on Aecon. So I've been sitting on my wallet for the past couple of years watching this go up. Mm-hmm. Is there room for this to move, or should I look elsewhere? That's my question. Have a great day.
Yeah. Thank you for that question. Aecon's going to benefit, right, from construction and build-outs pretty much everywhere.
Yeah. So Aecon, the outlook for Aecon is better. The subway issues in Toronto and these things, the cost overruns, have really pummeled them. There's newer managements has come in. They've got a lot more focused on the contracts we're taking and things like that. That's why the stock's going up, and there's a plethora of these builds required. So, yes, from a conceptual standpoint, Aecon's a buy. We do not own it. We are looking at it, still trying to come to terms with the price-earnings ratio.
Okay, so despite the run-up, you would still put some money in?
Mm-hmm.
Okay.
Yeah.
All right, let's move to an email then from Ryan, who says, does Bruce have any opinions on whether I should buy Two. I sort of missed.
Take Two.
Take Two. Thank you.
Take Two is one of the leading gaming
Yes.
companies in the U.S. It's not a stock we own. It's obviously down again, probably as a result of AI. That you can make your own games or do this sort of stuff. I think the games they are around, gaming is not going to go away. You could probably go in and buy a little bit and see what happens. Yeah.
Okay, but it's more of sort of if you've got that money to do.
Yeah.
Got it.
Yeah.
All right. Let's take a quick break then. We will get to past picks from Bruce when we come back. Stay tuned for that. Time to go through past picks with Bruce Murray from April 17th of last year, so just under a year ago. At the time, Bruce, you picked Meta, which was on the NASDAQ at 501.48 US, up today to 656.69, so 31% upside and 31% total return. We talked a little bit during the break about one of the reasons the stock has done well, which was getting rid of the metaverse or some of the budget for it.
Yeah, reducing the spending on the metaverse, but the other businesses are just so profitable that
it didn't make a difference.
Well, yeah. I mean, if they didn't, it'd probably be a $700 stock instead of a $600 stock. But yeah, it's a very powerful thing. And they are also spending money to get into AI, which has caused the recent slowdown on this. And we believe the AI expenditures for the companies that can afford it, which is, we'll talk about another one later, but Meta got tons of cash. This is going to be a very expensive game to play. And so the winners who are going to be the people that can afford to play all 9 innings with spending money across the spectrum. So.
Okay, so definitely you would put some more money in. You expect to bounce
Yeah,
back on it.
it's a core holding in our global growth fund. Mm-hmm.
Okay, let's get to your next pick. Eli Lilly, LLY, New York, 839.96 US in April of last year to 995.65. So 19% return, same for total return. Pharmacare has come back this year. There's a renewed interest in the sector.
Yeah.
Can you frame Eli Lilly to its peers and how you think it's doing comparably?
I mean, Eli Lilly is winning the weight loss drug war. They're the first to have a pill. Their efficiencies on the studies, they have a lower side effects and higher
For the pill.
Yeah, for the pill, for the drug, for everything. And so that's been the driver of this stock. And as it expands, they've also got a bunch of drugs that may work, like they've actually Alzheimer's and things like that they think they can improve the situation on. So we'll probably see some cancer. I'm hearing from people in the cancer business that massive strides are going to be made against cancer in the next 5 years.
Yeah, wouldn't that be something?
Well, yeah.
Let's talk a little bit about patents and competition in that space for weight loss, because I know the competition's pretty stiff.
Yeah.
But Eli Lilly leads. Can they hold on to that lead?
Well, that's the thing. Yeah, I believe they can. They're a giant. They've got the capital. They've got the distribution, and there's a lot of other things that have to come in here. You're going to be the third or fourth player coming out in next. I mean, Pfizer, for example, is working on one. They're all the drug companies. It's such a huge market. They're all looking at trying to get in. So.
Okay, and you don't worry sort of about them keeping that lead. Okay, let's get to your next pick then. Linamar, LNR on the TSX. They just reported earnings recently, 48.15 at the time, to 88.05 today. So 83% upside, 85% in total return. We did talk a little bit earlier about the fact that when you have these picks, of course, it was right in the middle of Liberation Day, announcements and everything else. And had Linamar already started moving down at that point?
Yeah, Linamar was was a $70 stock before. It fell to 44. They actually had no impact. Everything they did in Canada was under USMCA.
Kuzma, yes.
And so they were all
But that was questionable at first.
Yeah, it was
because
questionable.
we didn't know that was going to happen, that carve-out.
Right. It was questionable. But anyway, the stock dropped, I think, bottomed at 44. My target on stock is to make $12, probably, 27, 28, and 12 multiples, $150, $145 stock. So, I mean, it's still a great opportunity.
And did you buy in at that time, or were you already holding it previously?
We managed portfolios, and Linamar would have had probably a 4.5% or 5% position. As it drops, we maintain that position as it came back. So we bought probably a couple 100,000 shares as it dropped. Some at 50, some and we sold it as it came back. So yeah, and I mean,
you still hold it.
We hold our core position of 4%, and we, I think we made about $10 a share, and probably doubled our shareholding just on average on that. So we manage our portfolios. A stock drops if there's no reason why we buy it back. If a stock goes up and the random walk of Wall Street's the reason it's up, we sell it down. But it does force us to evaluate every stock that's moving differently than the market. So it's just another discipline in our process.
Okay. Good one. Obviously, that's working for you. We're going to take a quick break. We'll come back with more questions for Bruce Murray in just a moment. Stay tuned. Welcome back. Let's go to Stefan on the line. He's got a question today. He's in Montreal. Question today for Bruce Murray. Hi, Stefan.
Hello, good afternoon. Well, my question is on oil. I understand that there's many moving parts, especially with what's happening in Iran right now. But I've always preferred, because of the dividend, white cap. But now I'm looking at Baytex Energy. It seems to have a little bit more torque when there's a lot of when the oil moves up. So I was wanting to know what Bruce would think of a short-term position in Baytex Energy right now. Thank you, and I'll listen to your. I'll hang up and listen to your answer. Thank you.
Thank you for the question. What are your thoughts on momentum for Baytex at this point?
Well, he also mentioned Whitecap, which is a core holding in our income fund, because of the dividend. And but Baytex, obviously, the Western Canadian oil companies are all going to have a field day. I mean, price has gone up, so it was totally unanticipated. So all these stocks are probably working in the short term until the day they declare the Straits of Hormuz open. And
so it could be very short term. We just don't know.
Yeah. And
beyond that benefit, would you still put money in?
Well, I mean, we need more export capacity, and we have more coming in the West Coast, and it's relatively small incremental to the total Western Canadian production. We're trying to get pipelines to Texas. Texas can export way more product than the Canadian West Coast can. It's probably 10 to 12 times, and they're building it faster. They're building more than we have in total already. So all these stocks. So yeah, it's a good environment. These stocks have been depressed for 30 years in some respects. It's the 1970s when the oil was really, you had to own it, with the exception of a few small bumps.
Okay, so I guess because it's already benefiting from what's going on in the Middle East, would you wait for a pullback, as you mentioned, the end of the conflict before putting money in?
No, because at the end of the pullback, you're not going to want to own probably any of these stocks for quite a while.
Okay.
So yeah, it's a short-term play. Yeah.
Got it. All right, let's go to our next caller, Brian in Ottawa. Hi, Brian.
Hello. My question today is on Brookfield Corporation. Over the past few weeks, it's been trading quite poorly. It was near 65. It's pulled all the way back even below 55, hovering a bit above right now. I'm wondering if you have any insights into the reason why it's been doing so poorly, and would you view Brookfield as a buying opportunity around this price, or do you have reason to be concerned and would stay away? Thank you.
So great question. Do you own any of the Brookfields?
No.
Okay.
We don't. I think the reason Brookfield is falling back is the big private equity firms are all of a sudden having to declare sort of force majeure. Oh, we can't pay your money back, as some things in main, like look at, say, put a lot of money in Canadian housing. You're not getting your money, and you're going to get paid back in 5 years. Well, you can't do it. It's that sort of stuff is hitting, and so there's private equities having a little bit of a conundrum as they go through this. And I haven't read anything direct about Brookfield, but I think that influence is spreading, is out there. I think you could buy Brookfield, though, here. It's a very solid company, well managed, and has a very diversified portfolio of
So
interests.
you'd buy in the dip?
You could buy in the dip, and the dividend yield would be your return, maybe a little bit of capital gain. Mm-hmm.
Okay. Let's move on to Diane then. She's in North Bay, Ontario, with her question. Hi, Diane.
Oh, hi. Hello, Bruce. My question is about Lululemon. I bought it over 2 years ago, and it's been on a steady decline. Was expecting to see some kind of an improvement with the Olympics and the NFL gear, but that had no impact. And just wondering what your thoughts are. Do you recommend holding, selling Lululemon? Thank you.
Thank you for that question. It was a darling for a while.
Yes, yeah. I will answer that question. We built a position in our global equity fund in Lululemon sort of over the last 6 months. The stock's been, in the height of and we've made a little bit of money on, and we've actually, again, on our process, we sold a little bit because it did well for a while. But if it drops back down, we'll be buying more. We are looking at it as a long-term turnaround play. And, the quality of the company, the quality of their reputation is all in their favor. So, yes, we think it is. But
they still have, they're looking at new leadership as well, right?
Mm-hmm,
So that will perhaps bring them some momentum?
Yeah. I mean, the founder of the company is screaming at them about it. And
he screams a lot about different things, yes.
But maybe he shouldn't have left the business.
Yeah.
Anyway, so it's a high quality speculative turnaround. Maybe that's the way to put it.
Got it. Okay. That was for Diane. Let's go on to an email from Jean, who says metal prices have been volatile, but do remain elevated. One obvious beneficiary would be major drilling. Do you agree? Tell me a bit about major drilling.
So major drilling was a past pick of mine in, I think, 9 months ago or so. Okay. Let's put it this way. I've never seen so many IPOs for new gold mining, copper companies, all speculative. They've got prospects. They've raised the money. They've done, we've gone had knocked chips off the surface and stuff. They're sending them back. The drilling is still to come. Major drilling in 2007, I think, got to $23 on a much, this is the biggest boom I've ever seen. This is bigger than the 1970s when, gold first was diffused. And so it's going to be huge. This stock has got massive potential upside. Is it $25? Is it $40? We'll see.
You mentioned, though, it's speculative, right? Like they're all coming out.
Well, they've got the money. They're going to spend the money. I mean, this stock, you buy it, and when you're happy with the price, you sell it. Because it's going to be this, and then,
drop down.
But it could be 5 years out. So, I mean,
so it's one you have to watch. If you have a position in watch, sell when it's high, pick it back up later.
Yeah, I think it's going to be, if it starts going down, it's probably the end. I mean, because, these companies have got a lot of money to spend. They're going to spend it. And those that find it are going to then go on and build mines. Those that don't are going to disappear. And the cycle is going to be over as far as the speculative drilling part goes.
Okay, so it's a longer-term play.
Yeah, and they do have, they probably 40 to 50% of the business is core business in the big mines in, like the huge copper mines in Mongolia. They do all the drilling. They want to bring the drillers to Canada because we're short. We need them here.
Yeah.
And so they do have a real core business underlying. They're the largest in the world. They're a quality asset. So it's the right way to play it, but it's extremely cyclical, and we're on the right side of the cycle. So buy and hold.
Okay. Let's go to an email from Josh. He says, I'm inquiring about ServiceNow, if they can be a standout again in the roughed up software sector. Talk to me a little bit more about where you are landing on software stocks if you are considering the beatdown they've had.
Yeah, so it's, again, it's AI. Is AI going to put everybody out of business? We truly don't know the answer to that. We believe that the high quality internet-based, software-based companies that use AI well will do
Internally.
Yeah,
yes.
will do very well. And we think ServiceNow is a leader in this business, and I suspect will come back. We don't own the stock. We haven't done our work on it.
Do you own other software stocks?
Yes, we own other software. We own Microsoft. Microsoft's our core holding in the software sector.
Got it. Okay. Let's take a quick break then. We'll get back to more phone calls and emails for Bruce Murray in just a moment. Stay tuned. Welcome back, and thanks for joining us for Market Call. Let's go to the phone lines. We have caller G on the line from Calgary. What's your question today?
Hi there, folks. I'd like Bruce's thoughts on TELUS and if he holds it, and would he buy at these levels? You guys are doing an amazing job. I will hang up and listen. Thank you.
Okay, thank you for the question. We've had a few questions about TELUS. Obviously, it's got a dividend that people like, but they want to know whether you think the stock's going to come back from where it is. What are your thoughts?
Okay, well, I guess we can answer this by 2 months ago we didn't own TELUS, now we do.
Okay.
We put it in our income growth fund with the dividend being 9%. There's not many 9% dividends left in the market.
Is it sustainable?
So let's address it this way.
Sure.
Even if they cut it to 5%, it's still going to be in line with, it's still going to be one of the better yields in the market. So we think we think the stock's, it's a good stock to buy for the dividend yield. Former CEO of CIBC coming in to turn it around may lead to things. They can cut the dividend, they can sell businesses like TELUS Health that have fairly material market values. I mean, the debt is an issue. And, when we bought the stock, there's supposed to be 2 more rate cuts in the U.S. Now those are gone, and, maybe because inflationary pressures are coming back. So it's tricky, but we think that the risk is worth taking on the dividend. And if they don't cut it and the world stabilizes and I'm getting people phoning me still every day trying to sell me a new cell phone, and we'll give you a better price. So the competition's still heavy.
The competition is fierce. I think the stability question is one of the overriding concerns when you have a president in the U.S. who likes to do what he likes to do. Okay, let's go to Debbie. Debbie's in Burnaby, BC. Hi, Debbie.
Hi, good morning. Thank you for taking my call. I'd like to know his thoughts on Doman Building Materials. I'm thinking of purchasing it, but I would like his opinion. Thank you. I'll listen. Bye-bye.
Okay, thank you for the question. Doman Building.
Doman is one of the core holdings in our income growth fund. It's got a nice dividend yield. We like the way the company's business is really, they don't cut lumber, they buy the lumber and resell it in the U.S. through distribution and Lowe's is one of their big customers. And they're doing a very good job of this. The stock price has been gradually moving up. Well,
is this cyclical? I'm looking at all the values here.
It's a little, it is cyclical. I mean, the business isn't as cyclical as the chart, but it reacts to, the housing market's falling, the market volume is going up. So there's stuff like that in there, but we think it's a solid business, and it's a distribution business, so it's not as volatile as the market really is.
You mentioned that they sell to Lowe's, for example.
Yeah.
Do they sell straight to builders at all? We know that housing has been an issue, but not one people have picked up and started running with yet.
I can't answer whether they sell directly to builders, but they do have distribution centers, and I expect they do through,
So if that picks up, they could benefit from that as well. Okay. Let's go to an email from Garth. Garth says, what does Bruce think about Air Canada?
Is Garth in Vancouver?
Well, here's the question about Air Canada right now, with all the other travel stocks hit by, fueling up is going to be an immediate hit.
I suspect Garth's an old colleague of mine. Anyway, Air Canada, obviously, I like Air Canada for a long-term play. I think it's a $40 stock eventually. But with the current situation we're in, it's not the time to buy it until it's over. I mean, this is a stock I actually recommended it a year ago on here. But then, we had Trump's tariffs. Canadians stopped flying to the U.S. Then we had the strike, and now we've got this. So we've
now nobody's flying anywhere.
Yeah, so we've had three strikes in a row, and so maybe probably I think it'll be a buy, but because the fourth strike, I don't think will come.
Okay, so you think after perhaps we get that bounce back of prices in oil, when things get settled there, you would buy it?
Well, I mean, we got high oil prices the next 6 months. It's definitely going to affect them. We have the uncertainty over what's going to happen in USMCA and all this sort of stuff.
So you're looking at the fall maybe before you dip in?
Yeah, I mean, if it goes to $15, buy it. But but just accumulate it gradually and slowly. It's going to work in the long term.
All right. Okay, let's get to another email from Yasmin. She says, good afternoon, Morella Bruce. Your thoughts on Pfizer, please. Let's go back to Pharma and your thoughts on Pfizer.
So before the pandemic, Pfizer was a $40 stock. And then the pandemic, they made a boatload of money. Yes. Now the stock's 27. It's got a 7% dividend yield. They clearly wasted a bunch of money after the pandemic. They're refocused now, and we need a new blockbuster drug. Their blockbuster drugs are have been genericized.
They're tapped out, yes.
Yeah, Viagra and
the patents are gone.
Patents are gone. So, and they still have a few of these patented drugs, but they're not the blockbusters. And so they've got a huge budget. They've got a lot of research, and we count on them finding something. In the meantime, you're getting a 7% dividend yield, which is probably good for the next 3 years. So if you buy the stock, you can get the 7% dividend yield. And if something comes through the pipeline, you're going to make a lot of money. If something doesn't come through the pipeline, the stock's going to drift lower, and they'll probably have to cut the dividend. But that's the story.
Okay,
we take the risk.
Let's go from Yasmin to another email from Danny, wondering if Mr. Murray would put Canadian Tire at a buy. We haven't talked about Canadian Tire. We haven't talked about retail more generally. Thoughts?
Yeah. So Canadian Tire is a very good company. Last year they didn't have a winter, and a buddy of mine owns a Canadian Tire store. But anyway, they didn't have a winter, and this year they had a winter, so they were able to probably clear out a lot of snow shovels and stuff that they had left over. It's a solid business. It'll grow, but it is retail. It's probably grow 2 or 3. Real growth will be 2 to 3%, and you'll get inflationary growth of another 2 to 3%, and then you're going to get the volatility of the consumer. And the consumer, I think, is a little scared right now. Gun shy, yeah. But Canadian Tire is more of a necessities place.
You put it more as
but but it does have probably 40% necessities, 60% discretionary.
Okay, not a bad mix.
Yeah. Right. So it's a great company. I'm not excited about it.
All right. Let's take a quick break. We're going to come back with new picks from Bruce. Back in a moment. Join us tomorrow on Market Call. Stan Wong with us on the show, portfolio manager at Scotia Wealth Management. He'll take your questions on North American large caps and ETFs. And if you miss Market Call, check out our daily podcast. Find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Time now for new top picks from Bruce Murray. We're going to start with Alphabet, Google, of course, on the NASDAQ. What do you like about Google moving forward? And when you look at the Mag 7, is that your first choice?
It's this maybe the best home run choice. I'm not saying that one of the other ones can't outperform it, but we just like Google. It's a behemoth. They already dominate the internet. They dominate the revenue from the internet. Their Gemini product for AI is, keeps leapfrogging with ChatGPT, and they have the money to play the game where ChatGPT has to keep raising money. So we feel very good about that. And at 20, in the low 20s multiples, they're going to grow their revenue in high mid-teens. Their earnings will go along with it.
Are you surprised that the search function was not displaced, as there were concerns about that early on?
Well, I mean, they own the data, so if I own the
it's
data,
immaterial.
if I own the data, you can't. I'm not going to let you. You're going to pay me if you wanted to get it. Yeah.
Okay.
Yeah. So I mean, that's, I think what's a key part of this thing is that their database is huge. So yeah, we like that, and they've got all kinds of other little businesses. YouTube's doing better.
Yeah, we forget about YouTube sometime, but it's a big part of their business.
Yeah. They're second behind Microsoft in Office systems and software. I know people that run their business on Google Cloud. So it's
a where to go.
It's the Mag 7. It's safe. It's very safe, and we think there's upside, and there's fear in the moment. So it's good buying opportunity.
Got it. Okay, let's get to your next pick, which is Airbus. What do you like about Airbus? That stock has been down quite a bit as well.
Yeah. So I mean, we've seen Airbus pull back, I guess, partly with concerns around. There's been traffic issues in the U.S.,
yes.
Safety issues, things like that. But they have a 10-plus year backlog on their main airline, making airliners and the used value of airplanes is pretty good. Like, one of the things behind Air Canada is they've got a lot of value in their fleet that's unrecognized in the stock price. And so we just think that's great. And the other 20% of the business is mainly European defense. They make everything from fighters to drones. And as Europe spends money, Airbus will be a big beneficiary. So I think it's just it's a very easy story. It's backed off about 20%. We think you'll get that back and more over time. It's be a slow, steady upward trend.
Got it. Okay, that's Airbus. Let's get to your third pick, which is Northwest Healthcare Properties. So it's a REIT in the U.S. They do both hospitals and clinics, kind of thing.
It's actually Canadian.
It is Canadian.
It's a Canadian company, yeah.
And what do you like about the REIT? Because a lot of people are a little bit gun shy with REITs these days.
Yeah. So this is healthcare. So the business part of the sell side is there. This company was poorly managed. They thought that they were invincible, and they just started borrowing money and buying healthcare properties around the world, and it blew up on them. And when they raised rates in 23, 24, and the company had to downsize, had to cut the dividend substantially. The dividend is now 3 cents a month, or the payment, and it's a 6+ yield, so it's still one of the better yields in the market. And the new management is a gentleman came in from Brookfield, and he's just turning the company around. So they're going to
Are they selling some of what they have?
Selling stuff in Europe. They're going to sell in Europe. They're going to sell, they got stuff in Brazil. Like he says, what are we doing in Brazil? But we're there. So when we don't need to sell it tomorrow, but when we get the right bid, we'll sell it and concentrate on North America. They're building a new facility out in Oshawa for off-site surgery. That one of the hospitals is moving. I had my knees replaced. And,
and we're going to get more of that.
You don't need to do that in a hospital, so this sort of stuff will be done. And so healthcare will be a growing business as the population continues to age.
How big of an operation do they run in the U.S.? How much of their business is it? Roughly?
It's probably 25, 30%.
Oh, okay, so it's significant.
Yeah, it's material, yeah.
And you think there's growth for them there?
Yeah, they will concentrate on Canada and the U.S. longer term.
Got it. Okay, well, that does it for Market Call. Bruce, thanks very much for joining us. Good to see you.
Thank you.
And thank you for joining us today for the show. We'll see you back here again tomorrow.